All right, good morning, good afternoon, everybody. Let's go ahead and get started with this broad market analysis for this week. We'll be covering the 30th of July into the 4th of August. That's right. So your monthly candles will be closing out. Big news though, going forward, a few things. So here at the Simpler Room, this is something that I do as extra. So this is something that I've been doing for many, many years, and it helps me to kind of get a pulse on the market, just kind of like talking through these things, understand what I'm looking at. And so I bring this to you as basically just kind of extra, right? And it takes time for me to do on Sundays. And saying that, I'm trying to reduce the amount of time that it takes me to upload the charts into the room folder and so forth. It's not as easy as I'm used to back in the old days. It was really simple for me just to copy and paste and put this into Discord. That's not the case over here. So, in saying that, going forward, I'm only going to be releasing the video. All right. And when we do the video, it's important for you to understand once we get to a chart and you want to copy the levels, go ahead and hit the pause on YouTube. And if you pause it, then basically it's like you're getting a chart, right? You could just go in here and copy the levels and so forth instead of me taking the time to upload, download, rename, and then stick in the room drive. Just pause this video when we get to charts if there's any information that you need. And then starting on the next week, so next week, what I would like to do the following Sunday, so right here on the 6th, I always do these on the weekend. All right. So on Sundays. So on the 6th, what I'll be doing is somewhere between the hours of 8 to 10 a.m. Central Time. If you're following me on YouTube, you should get an update to say, hey, John is going live. You can come over, and what I'm going to do is I'm actually going to make these live events so that you can follow along while I'm doing it. And what that does for me, instead of me uploading and and then downloading the video and then putting it on YouTube, when I go live, these live sessions or streaming, as they say, it automatically records for me and I don't have to do any of that stuff. So this is going to take some of that time out for me and give me back the time that I'm looking for on my Sundays. Also, very important, the neutral strategy. If you guys use the neutral strategy and you find it useful, I'm going to put this week's chart on Twitter. Okay. And what I want you to do is I want you to go over to my Twitter account and please say that you find it useful. So I want you to comment underneath the post that I'm going to put out. Okay. And so that's really important. Listen, if I don't get enough interest in that on my Twitter account, what I'm going to do is I'm going to stop providing them. Again, this is an extra that I've been doing for, I would say, up to 7 or 8 years now. And I need to get a pulse on how many people are actually using this. And again, if you are, please go to my Twitter account, give it a like, the chart for this week, and then comment and say, hey, John, I do use this, and that will give me a better idea. All right, so going forward, let's go ahead and get started with today's broad market analysis. Today, we are looking at earning whispers. We have a action-packed week. We know that the market's given us a lot of opportunity. We see some of our biggest and happiest names that make me happy on here for this week, such as AMD. Then moving over here, PayPal, Shopify, Qualcomm, Humana, and I'm just naming a few that are sticking out to me. Etsy, Amazon, Apple, Coinbase, Block, Airbnb, DraftKings. Wonder what they have up their sleeve. Hasbro. This one's kind of funny. No comment there. That has nothing to do with me. But moving on, if you know what I'm talking about, give this a like. And moving on, we are going to be looking at the market watch for this week. So why do we use this? Remember, everything that I teach here is news is a catalyst that pushes price into supplier demand. All of this jazz is noise. I don't care what you say. I am a day trader. I'm not a newscaster. I'm not here to fill your head with a bunch of opinions. All I want to do is pay attention to price. But you need to be aware when these events happen because they can cause volatility in the market. And if you don't have a plan, these are going to disrupt your trading day. We always have a plan. And I love this kind of stuff. So notice here we have Chicago Business Barometer, Fed Senior Loan Survey on Monday. On Tuesday, we have S&P Final U.S. Manufacturing, Job Openings, ISM Manufacturing, Construction Spending. Wednesday, ADP Employment is all we got going on. Thursday, Initial Jobless Claims, U.S. Productivity, S&P Final U.S. Services, PMI, ISM Services, and Factory Orders. And then Friday, U.S. Non-Farm Payrolls, U.S. Employment Rate, U.S. Hourly Wages. And if we go back here, remember, Thursday, you also have Amazon and Apple after hours. So what I think about when I look at this again on Thursday is, for example, if for some reason this information that drops somehow pulls the market back, then I'll be looking for a buying opportunity. I love trading earnings by using debit spreads. You guys know that. I'll be looking for that opportunity in Amazon and in Apple. Okay. So once again, these could be catalysts that push price either into supplier demand. We're not too sure yet, but once we get there, I'll get a better understanding of what I could expect into after hours. So again, you could get big opportunities for some of these huge names, you know. Moving on, getting over here into last week's neutral strategy. Remember, I have a quick video on YouTube teaching you how to trade this. Basically, you just go long above the neutral or you go short below. All right. And this is made for traders who are away from the screens, who want to enjoy other things, right? Instead of looking at the screen every 5 minutes, they're off doing their job, dropping off their kids, going to play sports, whatever it is that you do for your hobbies on the downside of not trading. You're allowed to be able to take these trades, understand where these levels are coming from, Fibonacci, supply and demand, Fibonacci extension, support and resistance. I throw all that together to give you these great plans, and they've been working over and over. And this is the chart. Once again, I need you to go over to my Twitter account and make sure that you give it a like and a comment that you're actually using these. So for this week, folks, you can see, first of all, before we move on, this worked really well. We hit T3, and over here you can see that we also hit T3, and all you had to do was, once again, go long above the neutral. Now, moving into this week, this is where you would pause the video if you're looking for these levels. 457.32 by 455.66. Notice I made them really tight this week. I'm ready to trade. Not as much patience for this neutral strategy. So your risk is the difference between these two on both the SPY and the QQQ. You can see that my first target to the upside on SPY is around this inside and up formation. This is a big sell-off point. This is a supply zone for now. Bulls, just beware of that 458.5 by 459.5. You could find a lot of resistance there. Targets to the upside, once again, pause this. Targets to the downside, once again, pause this. These are resistance until proven otherwise. These are support until proven otherwise. Our bigger zone for support comes in at 453.5 by 451.5. And over here on the QQQ, your neutral strategy is about $3 or so wide. You could see that 386 by 388. You can see we have resistance, just like the SPY. We have these formations. We have a sell-off. Bulls, you got to get above this pivot here. Same thing, bulls, you got to get above this pivot if you want to see further continuation to the upside. To the downside, support, bigger support for the Qs, 377.85 by 374.46, a little bit wider than we have over here on the SPY. But once again, I do believe that our range for this week could be between 393 and 369 on the Qs. And over here on the SPY, it could be 463 by 451. 44 on the SPY. If you have any other questions, please let me know. Do not forget to go out there to the Twitter and please give it a like if you want to see this information. If not, then I could discontinue doing this strategy. Go ahead, moving forward. This is our bigger picture on the SPY. Please take the time to read the notes. I know how to read the market. I do very well at reading the market. I also love to execute. Far as the updates go, 7:30 price did close over the 454.77. This is now immediate support, and bigger support is 446 and a half. 463 is the target as long as that immediate support continues to hold. It's hard to see in here, but you can go back to our past charts to look at this. We have a supply zone on the quarterly, and what I've done is break it into quarters by using Fibonacci. Our first target was at 25% of the supply zone, which was 454.77. And again, that is going to be your immediate support going into tonight when the futures open. All right. Then below that, we have 446.56 that makes up the beginning of the supply zone. That right now is the bigger support. So basically for the week, if we hold that, things still look okay. All right. Let's go ahead and move on to the Qs. Bigger picture, same thing. If you read last week, price hit the 385 target, the trendy edge, and rejected as planned. This is the top until we get 2 to 3 days over that. We have not got 2 to 3 days over that level. Therefore, it is still resistance. So we come into today's update. Price still under the edge, 385. Amazon, Apple, etc. will make or break, I think, at this level for the Qs. We are in supply. Just be aware of that. And overall, your level of 362 remains support. As far as targets are concerned, folks here in the room, just go over to the neutral strategy that I just ended up giving you, and this is going to give you those targets to the upside, okay? Moving on over into our next chart, this is going to be our ES futures, all right? And so this is important. I'm going to give you the weekly look. It's a if, this, and that. Things continue to do what we wanted them to do. Now you can see 46.18 is resistance. 45.74 is support. When we talk about the weekly candle, all I care about is whether or not the weekly closes over. I understand we could push over it on the intraday, on the 5-minute, on the 4-hour, all of those things. But at the end of the day, all I care about is on Friday, right at maintenance period, are we closing above or below these levels? As far as support goes from a weekly standpoint, 45.74, resistance 46.18. We start to get over 46.18. Look for 46.58. Moving on over, this is your daily look. Remember, folks, the way that I teach this is when we get there, it's not an automatic short or an automatic long. Use your TTM Squeeze Pro anywhere from your 1 to 5 minute time frame. Look for the colors that I teach you, then look to execute. Again, short triggers are monitored here at 4659 and a half. Go ahead and pause the screen, put these levels on your chart. Over here, this is our 4-hour. Notice our resistance identifies that inside and down. That's around 46.21 by 46.43. And then we have levels of support by 45.78 by 45.52. Now, you may be asking yourself, well, which one do I look at? I look at all of them. Everyone is different. If you're on the long swing of things, I'm only paying attention to the weekly. If you're looking at the 4-hour, I'm just kind of intraday trading Monday through Wednesday. And as we get closer to the end of the week, we start breaking these down into 30 minutes, 1 hour, and so forth. All these levels are very, very important to your blueprint for the week. And again, we go into great detail how to find these levels and so forth here at Simpler Trading. Let's go ahead and move on. This is your Nasdaq. Nothing's changed here. So again, that is that level that I identified on your higher time frame QQQ. That is your trendy edge. This auto identifies supply and demand. Notice that we're coming up into it. We're rejecting. We have topping wicks. It is resistance until proven otherwise. Your support for this week, big names coming in, right? For some reason, let's just say hypothetically they don't do well. Well, if the market uses it as an excuse to really get us a nice pullback, this is where I'd expect buyers to show up from a deeper pullback and from a weekly perspective. Far as the week is concerned, you got to close above here, bulls, above that 15,882 for things to start looking better. Over here is your daily. These give you short, resistance, trigger long levels. Again, every time we get there, use your TTM Squeeze Pro to identify on a smaller time frame what that histogram is telling you. Again, I teach that in the room. If you have any questions, please reach out to me. Over here, this is your 4-hour. I did not change this. This is from last week. Notice that the 150-minute identifies supply here between 15,910 by 16,061. I believe this continues to be resistance until we start to find out a little bit more from some of that econ data, but also those big names that are reporting. For any reason, things get really ugly. Look for price to come down to about 15,600 by 15,500, where I'd imagine we'd find support. But if for something, the brown hits the fan, then we could see things come all the way back into 15,341, where we'd find buyers in here. Let's go ahead and move on. This is going to be your skew. The skew going into earnings season, not a big deal for me, but it is telling you to be extremely cautious up here, as a majority of the traders are on the long side. And when they are, they're looking for an excuse to pull the market and kind of collect that liquidity from us retail traders. Over here, fear and greed, same thing. 78 tells you everybody you're all extremely greedy, and you need to be aware of that most traders are on the long side. My overall sentiment going into this week is going to remain the same. I believe that because of earnings, it's more of a sit and wait. We're intraday trading, we're having a really good time. Things are, we're having fun. All right, so let's continue to have fun. Nothing's going to change. You guys know that. I've been using the same methodology for years. Nothing's going to change. We're going to use our scanners. We're going to be identifying supply and demand levels. These catalysts that come out in the market are going to be reasons that we wait for those catalysts to push price into those levels, and then we're going to execute. It's the same thing over and over. As far as positions going into tomorrow, again, I have some Apple on that's positive. That's just a little trade that's going into earnings. Disney, I started leaps out into 2025. Over here on plug, we were up 200%. We've trimmed. The remaining position is 57%. That's also a leap with 173 days to go. SE, we started on Friday. That was a nice trade. I think that pushed around 35 to 40% up, and then I added right before the close. And then moving on, I also bought into Tesla, which is also up and has 82 days to go. Now, my overall positions, far as cash is concerned, when I come over to my account statement and I look at my options, I'm basically coming in. I'm still about 99% cash. That's the way I want to be going into earnings season, is stay somewhere between 98 and 99% cash. I could still make good money on a daily or weekly basis, as long as I could stick to my plans and stay disciplined as I choose to. Now, I am doing one thing that I want to bring up to the members here. People keep asking about spreadsheets. If you know about me, I don't do spreadsheets. The reason why is because we are the only service that I'm aware of that my API is patched into this room. So you immediately see what I'm taking in my account. There is no cherry picking. You get to see exact entry price, exit price, percentage gain or loss. But one thing that I am looking into, and I got this from Melissa, and by the way, Melissa's back this week. I'm pumped. So she'll be back trading with us starting tomorrow. And so I hope you guys are looking forward to that. But I'm using what's called Trader Sync, and I am going to be syncing my positions into the room. And the way that this is going to work, and I want to share with you, this is just a trial as of right now. This is just some data over the last 30 days. This is what it's going to look like. And at the end of every week on Friday, what I'll do is a quick video and run through our trades to give you a synopsis of what's been happening, all right, in our trades here. All right, so like for example, if you look here, these are my CL future trades that I took over the last month or so. You can see some ES trades and so forth. So we're doing pretty well, like from a win to, and this is including my future trades. So my win rate for the past month is showing about 66%. So just under that 70%. If I were to take out probably futures, I'd probably be up above 70. There's a couple of trades that didn't work out for me, but overall, not bad performance with this account. And we are using very small allocation in here. So you can see it is possible to still make some money. But what I love about this is I'll be able to bring up a lot of statistics off of this trading. If you're interested, obviously you can come over here and check out Trader Sync. I'll be journaling from here. It's going to be really fun, and I think a really nice addition to what I'm already providing to you guys. So I'm pumped up to be using this. I'm just now starting to use it and kind of understand how to use it. It's going to take me a little while, but by this Friday, we should be good to go with a nice journaling instead of showing you a spreadsheet. This is coming straight from my account. So this is stuff that's plugged in from the account itself, okay? So let's see. I think that's all the information I have. And again, just a quick reminder. Let's make sure we all understand this. Let's go down really fast. Twitter account. My Twitter account looks like this. Make sure you got it right. Please don't be following any imposters out there. It is TR, the number three, NDYJON, Trendy John. And then right here, this is what it looks like as well. Blue check mark, 9,521 followers. I'm following 23 people. That's what it's showing right now. Sometimes these imposters, they'll get you. All right, they'll do something really small that you're not noticing, like this O right here would be a zero, right? Or this R right here might be something, or this three might be an eight. And you'll look at it, they use the same pictures and everything to try to get one on you. Please remember, I don't sell anything using this Twitter account. I'm not going to send you a message and say, hey, how's your crypto going? Like, that's not me. So make sure you're following me. And then notice when I come over here and I put a tweet down around and about the neutral strategy, again, what I want you to come in and do is I want you to hit that heart and like it. And then I want you to come over here where there are comments and I want you to put in here, yes, I'm using it, John, or sometimes I use it, but do I find it useful? Do you not find it useful? I need that information if you want to continue seeing some of this content that I'm providing to you. I really appreciate your support as always, and I cannot wait, and Melissa cannot wait to trade with you starting tomorrow morning, 30 minutes before the market opens. See you soon.